Even after spending over a decade abroad, managing investments across India, UK and the US, it took me years to understand the difference between NRE and NRO accounts, what exactly is this RNOR status, and most importantly, how to use them strategically. And if you're like most NRIs I meet, you have probably had questions. What's the difference between NRE and NRO account? When should I convert these accounts when I move back to India? How does RNOR work? And why is no one talking about it? Well, in this video, we are going to break it down into simple real-world language, so you can stop guessing and start using these accounts like a pro. So whether you are an NRI just starting your journey abroad or someone planning to return to India soon, this video is going to save you confusion, penalties, and possibly lakhs in unnecessary tax. Let's start with the basics. If you are an NRI, you are not allowed to keep your resident saving account in India anymore. Instead, you must operate in either or both of these. First is NRE accounts. That stands for non-resident external accounts. Think of it as your clean repatriable channel. You fund it only with your income that you earn outside India, your salary abroad, any overseas rentals, or any foreign remittances. Now here is why the NRE account is so special. The money is held in INR, but it's fully repatriable to your overseas account anytime. Any interest that you earn on your NRE saving or fixed deposits are completely tax-free in India while you remain an NRI. And you can open both savings and fixed deposits under NRE. So if your goal is to bring money into India temporarily and potentially take it back, then NRE is your friend. Moreover, you can also invest in Indian mutual funds using your NRE account, but only through some specific SEBI-registered platforms and banks. Some brokers like Zerodha or Grow allow investments through NRO-linked accounts only. For NRE-linked mutual funds in repatriable mode, you usually have to go through banks like HDFC, ICICI, Axis, or SBI that supports NRE mandates. But here is the key rule. You cannot deposit any India-earned income like rent or dividends into your NRE account. That would violate FEMA rules. Next is NRO accounts. That stands for non-resident ordinary account. To put it simply, this account is your legal channel to manage all your India earnings like rent, dividend, pensions, or any business generated income within India. Having said that, any interest earned here is fully taxable in India. TDS of 30% plus any surcharge and cess is deducted at source. You can repatriate up to $1 million per financial year after filling Form 15CA and a CA certified Form 15CB. You can invest in Indian mutual funds using your NRO account. This is the standard route on most platforms, but any income or gains are taxable in India. So your NRO account is for India-based inflows and rupee expenses during visits. But don't leave large idle balances here. Due to tax inefficiency and limited repatriation bandwidth, it's not the ideal long-term wealth channel. So what exactly happens when you move back to India? This is where most people mess up or miss out. The moment you become an Indian tax resident, which typically means staying in India for 182 or more days in a given financial year, then you're technically required to convert your NRO and NRE accounts into normal resident accounts. But don't do that in a rush. This is where RNOR status becomes a golden opportunity. So that's a good segue to RNOR. RNOR stands for resident but not ordinarily resident. RNOR is not a separate account. It's a tax status under Indian tax law. You may qualify for an RNOR status for up to 3 financial years if you were a non-resident in 9 out of the previous 10 tax years or spent less than 729 days in India in the last 7 financial years. Here is why RNOR status is so powerful. During your RNOR window, only Indian income is taxed in India. Your foreign income remains exempt during this period. Moreover, you can continue holding your NRE FDs during this window, and any interest remains tax-free until this RNOR window ends. Also, you're not required to disclose your foreign income or foreign bank accounts in your Indian tax return during this RNOR window. So this gives you ample amount of time to restructure all your investments and plan your financial transition without any sudden tax shocks. So whatever we have learned so far, let's simplify this with 3 real-world use cases. Scenario 1, you are an NRI in the UK with a property in India. Your 50,000 monthly rent that you receive in India, that will go into your NRO account. TDS at 30% plus cess and surcharge is auto-deducted unless you file for lower deduction. And if you want to repatriate your money back to the UK, you will be required to fill Form 15CA and a CA certified Form 15CB. And the maximum that you can repatriate is $1 million per financial year. Second scenario, you invest in Indian mutual funds from your NRE account. Yes, that is allowed as long as your funds are sourced from your foreign income. On mutual fund redemption, equity LTCG or long-term capital gain tax above 1.25 lakhs of gains in a given financial year will be taxed at 12.5%. As a UK tax resident, you must report this capital gains in your UK tax returns and claim DTAA relief. And scenario 3, let's say you plan to return permanently to India in 2026. Once you stay over 182 plus days in India, you automatically become an Indian tax resident. If eligible, you can claim for RNOR status as we discussed earlier. This keeps your foreign income and any interest that you earn on your NRE fixed deposits tax-free for up to 3 years. use this window to reorganize your investments, shut offshore accounts, or shift to resident structures without any tax hits. So one final myth that I would like to bust here is that NRO and NRE accounts are only meant for rich NRIs. Even if you're just starting abroad, setting up your NRO and NRE accounts early gives you legal compliance with FEMA, access to India-based investments, full flexibility to manage your India and foreign incomes, and finally smooth transition when you return. So start small, stay compliant, and build steadily. So if you found this video useful, please hit like and do consider subscribing. It helps me reach more NRIs like you. So this is all I had for this video. I'll see you soon in another interesting video. You take good care of yourself. This is me Pratik signing off from NRI Whizz. Over and out.